Assalamu alaikum. Today I'm going to discuss uh, on Basel. If you look at the historical background of Basel, it was first introduced in 1988. Uh, Basel Committee on Banking Supervision. Mm, Initially, Basel I was focused on credit risks, solely on credit risks. CAR, capital adequacy ratio. So minimum regulatory requirement was 8%, considering only credit risk. And subsequently, in 2004, they brought a more comprehensive and more sophisticated a three-pillar, uh, reforms. Suppose a strong building depends on its foundation. So, a strong banking systems they identified requires three pillars. One is regulated capital requirement, minimum capital requirement, that is 8%, and supervisory review systems, that and also uh, discipline in banking systems, in terms of financial reporting, in terms of risk based exposure disclosure. So these three pillars is more considered as more sophisticated, because they not only focused on credit risks, but they also focused on market risks and operational risks. That's why Basel II is considered as more comprehensive, because it covers the basic risk factors of the banking systems. And after 2008 global recessions and economic stress, Basel III was introduced, and Basel III was the updated version of Basel II. Basel II, the three pillars of Basel II was also taken into consideration. Besides, new new regulatory requirement for minimum capital was also given more attention. And because in Basel III is the minimum capital requirement, specifically common equity tier 1, was raised from 2% to 4.5%, and also another conservative buffer are 2.5, total 7%. And it also introduced leverage, and such as liquidity coverage ratio LCR and net stable funding ratio, it also introduced. So liquidity coverage ratio is focusing on short term liquidity management, because in the time of economic shocks, it is very important the banks, though its assets remains good, it's but because due to its crunch time, its repayment capacity may remain in questions. For example, in Bangladesh, we have seen some of the banks, because of some rumor, because of some bad news, people are rushed to get their money, but the banks are not able to pay their money back. So this is very important, that banks keep enough liquidity to meet its short term obligation in the case of economic stress, in the case of unexpected or unforeseen events. So in that case, so it's a focus is given more on common equity tier. And also, the bank should maintain at least 30 days liquidity, or liquid assets, as in a volume that is able to pay its 30 days short term obligations. And net stable fund is a long term 1 year horizon. The bank should keep its capital in a way, or liquidity in a way, that it can meet up its minimum long term payment as well. So these three phases of the banking systems are very important. And Basel III was introduced to make the bank more resilient, to make the bank more shock absorber, so to make the banking system prepare against the economic slowdown or economic shocks, so that during the time of recessions, during the time of any economic stress, bank cannot be bankrupt. So, and that's why it is a precautionary measures, more stricter, more tighter, more higher. So, so Basel 2 and 3 also focuses on discipline, on on financial exposure, and while publishing financial data, data accuracy, data ethics should be maintained, and so that, and the regulatories, supervision is also one of the key priority, because the central banks, who is the supervisor, which is the supervisor of the private banks or all other banks. So central banks should monitor, supervise the banking systems in a way. If there is any need for capital enhancement, they should go do for it. If there is any regulatory, pressure, or regulatory laws and policies regarding capital requirement against shock, and central bank may supervise it. Central bank can implement it. So the three pillars of Basel III to me is very important, and Basel III was also introduced more focus on leverage and liquidity, and that is also very important in the context of Bangladesh. We are witnessing what happened on the last couple of years. The liquidity crisis is become very common and prevalent. That's why I think implementation and proper implementation of Basel frameworks is very important to save the Bangladesh banking industry. Thank you for watching me.